Hello there, and thank you for joining us today on this journey into the world of cryptocurrencies. Here, we delve into the enlightening and sometimes intricate universe of digital assets. Today, we set our sights on three fascinating topics that are integral to the crypto sphere: the crypto bear market, the crypto bull run, and smart contracts. The crypto bear market, a phase characterized by falling prices and widespread pessimism, is a crucial part of our discussion. Then we have the crypto bull run, an exciting period of rising values and buoyant investor sentiment. Lastly, we'll explore smart contracts, these self-executing contracts with the terms of the agreement directly written into lines of code. These topics are not only intriguing, but they are also essential to understanding the dynamics of the crypto world. So stick around, you won't want to miss this insightful ride. And remember, if you find value in this video, hit that like button and subscribe to stay updated. First off, we venture into the territory of the crypto bear market. Now, what does that even mean? Well, in the simplest terms, a crypto bear market is a period where prices in the cryptocurrency world are falling, and widespread pessimism causes this negative sentiment to be sustained. It's a time when fear, uncertainty, and doubt, often referred to as FUD, reign supreme. You see, the term bear market gets its name from the way a bear attacks its prey, swiping down. It's a metaphor representing a decline in prices. So when we're in the midst of a bear market, you'll see prices trending downwards for an extended period, often by 20% or more. So what does a crypto bear market mean for investors? Well, it's not all doom and gloom. While it's true that asset values are dropping, and it can be a stressful time for many, it's also a time of opportunities. Some investors see this as a chance to buy cryptocurrencies at discounted prices in anticipation of a future rise. Of course, this strategy does involve a higher risk, but as the saying goes, no risk, no reward. Now, why might a bear market occur? There's no one-size-fits-all answer here. It could be due to a variety of factors like regulatory news, a major sell-off, or even simply a market correction after a bullish run. It's also worth noting that bear markets can vary in duration. They could last for months or even years. But remember, bear markets are an inherent part of the financial cycle. They represent one half of the market's natural rhythm, with bull markets being the other. Without these fluctuations, the market would be a flat, dull place. So, while bear markets may seem scary, they're essential for the market's overall health and development. So, a bear market isn't the end of the world, but a phase in the financial cycle. Now let's steer towards its counterpart, the bull market. Welcome to the more exhilarating side of the crypto world, the bull market. This is where the magic happens, where the seemingly impossible becomes achievable, and where fortunes can be made overnight. The bull market is a period of sustained growth in the value of cryptocurrencies. It's a time when optimism reigns supreme, and the market sentiment is overwhelmingly positive. The defining characteristic of a bull run is an increase in price, often a dramatic one. This is usually driven by an influx of new investors, which leads to an increase in demand for cryptocurrencies. As more people buy in, prices rise, creating a self-perpetuating cycle of growth. It's a thrilling ride, but it's not for the faint of heart. The bull market isn't just about making money, though. It's a time of innovation and progress in the crypto world. As prices rise, so too does the visibility of cryptocurrencies. This increased attention often leads to new developments and advancements, as more people and businesses start to explore the potential of this transformative technology. A number of factors can trigger a bull run. This can include technological advancements, regulatory changes, mainstream adoption, and even global events. For instance, the pandemic of 2020 led to an unprecedented bull run as people turned to cryptocurrencies as a potential safe haven in uncertain times. But it's important to remember that the bull market isn't all roses. With high rewards come high risks. Prices can be volatile, and what goes up must come down. So as exciting as a bull run can be, it's crucial to approach it with caution. Invest wisely, do your research, and never risk more than you can afford to lose. In essence, a bull market represents a period of optimism and positive growth in the market. It's a time when the potential of cryptocurrencies truly shines, and when the possibilities seem endless. But remember, the market is cyclical, and what goes up must eventually come down. So strap in, hold on tight, and enjoy the ride. Next, we'll delve into the exciting world of smart contracts. Moving on, let's demystify the concept of smart contracts. A smart contract is a self-executing contract with the terms of the agreement between buyer and seller being directly written into lines of code. Now that might sound a bit technical, but it's actually quite simple. These lines of code live on the blockchain network, and they automatically execute transactions once certain conditions are met. Now you might be thinking, what does this have to do with cryptocurrencies? Well, smart contracts are a fundamental part of many blockchain networks, including Ethereum, one of the largest and most well-known cryptocurrencies. They serve as the building blocks for more complex applications and transactions. Imagine you're buying a car from someone. Normally, you'd have to go through a ton of paperwork, maybe a middleman, and there's always a risk of fraud. But with a smart contract, the terms are set in code. Once you've transferred the agreed amount of cryptocurrency to the seller, the contract self-executes, and the car's ownership is transferred to you. No middleman, no risk of fraud. But it's not just about buying or selling things. Smart contracts can be used for a variety of purposes. They can be used to create decentralized applications, or dApps, which are like regular apps but with the added benefits of blockchain technology. They can also be used to create other cryptocurrencies or tokens, which can represent anything from virtual goods to shares in a company. What's more, because these contracts are stored on a blockchain, they're transparent and secure. Everyone on the network can see the contract, but no one can alter it once it's been created. This eliminates the risk of tampering and makes transactions more efficient. Smart contracts thus bring transparency, security, and efficiency to transactions. But how do they fit into real-world scenarios? Let's find out. Now, let's visualize the power of smart contracts through real-world applications. One of the most prominent use cases of smart contracts is in the finance sector. For instance, in decentralized finance, or DeFi, smart contracts are the backbone that enables the creation of trustless, permissionless financial systems. In this world, complex financial transactions like borrowing, lending, or even insurance agreements can be automated and enforced without the need for intermediaries like banks or brokers. Moving on, let's explore the potential of smart contracts in the supply chain industry. Here, smart contracts can provide a transparent, immutable record of a product's journey, from raw materials to the end consumer. This not only helps in combating counterfeit goods, but also ensures that ethical and environmental standards are met. In the real estate sector, smart contracts can streamline the cumbersome process of buying or selling property. Traditional property transactions often involve layers of bureaucracy, hefty fees, and a lot of time. By automating this process with smart contracts, we can make property transactions faster, cheaper, and more transparent. But the use of smart contracts extends beyond these sectors. In the world of intellectual property, for example, smart contracts can ensure artists and creators are fairly compensated for their work. They can also be used in voting systems to create a more secure and transparent electoral process. And we're just scratching the surface here. The potential applications for smart contracts are vast and varied, limited only by our imagination and the technological capabilities at our disposal. As we've seen, smart contracts have the potential to revolutionize numerous sectors, but remember, like any technology, they come with their own set of challenges and risks. It's important to keep this in mind as we continue to explore and innovate in the world of blockchain and smart contracts. So, stay curious, stay informed, and as always, tread with caution. So, there you have it. A quick guide to crypto bear markets, bull runs, and smart contracts. We've journeyed through the highs and lows of the crypto world, unraveling the mysteries of bear markets and bull runs. We've also peered into the fascinating realm of smart contracts, understanding their mechanics and the multitude of applications they hold. In the ever-evolving landscape of cryptocurrencies, it's crucial to stay informed and continue learning. The crypto world is a complex ecosystem, filled with opportunities and challenges, and it's our responsibility to navigate this space with knowledge and wisdom. Remember, every bear market is followed by a bull run, and every bull run has its bear market. It's a cycle, a rhythm of the crypto universe. And amidst all this, smart contracts are revolutionizing the way we interact with digital assets. Thanks for watching. And remember, knowledge is power, especially in the dynamic world of cryptocurrencies. Until next time, stay curious and keep exploring.